See, the next part is clubbing. Clubbing means go to club and enjoy. Yes or no? Go to club, party, enjoy. That is clubbing. Sir, we are already tired. Since morning we are listening to your bullshit, and now this is double bullshit you are talking. Okay. Pay attention. See, in clubbing, no, clubbing means what? Clubbing means, the name of this chapter is, see, income of other persons, includable in the total income, of the assessee. What is the name of this chapter? Recording started. Income of other person includable in the total income of the assessee. Meaning that, hello, 5 heads of income, you are earning your incomes. Assessee, please careful. Tell me, assessee, are you earning incomes? Are you including your incomes in the computation of your total income? Now please, assessee, income of other persons, no, will also be included in the computation of you. Income of other persons will be includable in the total income of the assessee. It will be added in the computation of your total income. It will be clubbed. It will be included. Hence, these provisions are known as clubbing provisions. Clubbing of income, meaning inclusion of income of other persons in your total income. Yes or no? Now see, sir, I don't want to pay tax on my income also. Bloody what these people are doing? They are telling me to include the income of other persons in my total income, and they want me to pay tax on that. Yes, because this is not their income. This was your income only. You have shifted on their name. You are trying to fool the government. That government. No, it is not my income. It is the income of my wife. Charge tax on my wife. Government, this is not my income. This is the income of my minor child. This is the income of my, charge tax on my minor child. Government, no. This is not my income. This is the income of my brother. Bloody your income only. You have shifted on the names of some other persons and trying to fool us, saying that the income is not your income. If you will fall under these cases, 100% the income was your income. And you are trying to show those incomes as the income of other persons. This is not going to help you out. We will include these incomes of other persons in your total income, because this was not their income, it was your income only. So we are bringing that income back to the place where that income should actually be taxed, by bringing that income in the computation of your total income. Getting my point? Why would anyone do that? Why would anyone do that? Simple, sir. You are an assessee. Already your income is crossed 10 lakhs. So you are a super rich assessee. Total income already more than 10 lakh. So you are already covered by 30% slab. Now whatever additional incomes you will get on above 10 lakhs, those are taxable at what rates? So instead of taking those incomes on your name and showing them taxable in your total income at 30%, now you will try to shift those incomes to your near and dear ones, so that income still remains with you. It again comes back to you, but not coming on your name. It gets taxed in their hands, either at less rates or there is no tax on incomes. Yes or no? So all those situations are identified and covered under clubbing provisions. One by one, I will speak the headings. I will speak the headings. Okay. So total sections are 60, 61, 62, 63, 64. In section 64, no, there is subsection 1. In subsection 1, clause 2 is there, clause 4 is there, clause 6 is there, clause 7 is there, and clause 8 is there. How many clause? How many clause? 5 clauses are there in 6 subsection 1. 64 1, 64 subsection 1. Now 64 subsection 1a. Then there is 64 2. 64 2, and there is one section 65. Only these things you are supposed to do. That's it. Now I will write the heading. Transfer of income. Transfer of without transfer of asset giving that income. So the asset from which the income is coming, without transferring that asset, you have transferred the income. So the income which you have transferred will not be taxable in the hands of transferee, it will be taxable in your hands. It will be clubbed in your total income. Section 6060. Now to avoid that, what are you going to do? You will transfer the asset also. But you will transfer the asset in such a way that section 61 does not get attracted and asset still remains in your control. That means revocable transfer. Meaning, just to avoid clubbing, you are not a mad person that you are going to give away your asset like anything. You still keep the asset in your control, income in your control. But you just want to avoid section 60, that clubbing should not happen under section 60, you will transfer the asset also. So don't worry, we'll cover you in section 61. What are we going to do? Under section 61, income of an asset, transferred by way of what? Revocable transfer. Revocable transfer. So any income from that asset which was transferred through revocable transfer will also be clubbed in your hands. Why? Asset or the income of the asset directly or indirectly comes back to you, or you have a right to reacquire the asset as and when you want, or there is a condition at the time of transfer that after some time the asset or the income will be again retransferred to you. By putting bloody these kind of conditions, if you are transferring your asset, means that asset is still in your control. You are just fooling us by saying that see, I don't have the asset belongs to my brother. If you have given your asset to your brother, give the complete control, no? Why are you saying that after these many years the asset will again come back to you? Oh, asset will remain with him, but the income of that asset will come back to me, or it will be used for my benefit. If you are putting these conditions at the time of transferring the asset, that means you still have the control over the asset, you still have the control over the income. These type of transfers are known as revocable transfer. Definition. Definition of RT, revocable transfer, given in section 62, which I just told you. Hello? If at the time of transfer the asset, if at the time of transfer of the asset, you put a condition that the asset or the income will be again retransferred to you, directly or indirectly, it is a revocable transfer. If at the time of transferring the asset, you have kept the control over the asset, you have transferred by putting a condition that asset is transferred to you, but as and when I want, I can retain the possession of the asset. I can reacquire the control over the asset or the income by putting this condition if you have transferred the asset. Then the transfer is revocable transfer. And if the asset is transferred by way of this mode, revocable transfer, And from this asset, if the transferee is earning income, that income will not be taxable for transferee. That will be clubbed in your total income. Section 61. What are the exceptions? What are the exceptions to section 61? That means in these cases, the clubbing provisions of section 61 will not be applied. Hello? Number one, the transfer is irrevocable. Transfer is during the lifetime of the transferee. So till the time transfer is alive, the asset will not come back to me. It will not be retransferred. Or I don't have a right to take the asset back in my control. So till the time he is alive, asset belongs to him. And entire income of that asset will also belong to him till the time he is alive. But the moment he will die, I will have the right to reacquire the asset. I will have the right to again take the asset in my control, again take the income in my control. But that right will come after the death of the transferee. But till the time transferee is alive, let him take the asset. Asset is in his control. Yes or no? Income will also be given to him. During that period, if I am not taking any benefit out of the asset, meaning the transfer is not revocable during the lifetime of the transferee. In that case, even if the transfer is revocable, but it is revocable during the lifetime or after the death? After the death of the transferee. In that case, section 61 will not apply. Exception. Under section 62, the transfer will be covered, and in that case, provisions of section 61 will not apply. All the income will be taxable in the hands of transferee. It will not be clubbed in the hands of transferor. Yes or no? There is one more transfer which is an exception, but that is very old, not relevant for you as of now. Okay, so only this case will you remember? So number one, tell me, section 60. Transfer of asset or transfer of income? Transfer of income without transferring the. So the person to whom you have transferred the income, that income will not be taxable to him, income will be taxable to you. Income will be taxable to the transferor. Yes or no? Hello, second, 61. You have transferred the asset, but the transfer was revocable transfer. The transfer was. Now from that asset, whatever income that person is earning will not be taxable for him, will be clubbed in your hands because the transfer was revocable transfer. But wait. One exception. Transfer is revocable. Still section 61 will not apply. Still clubbing will not be done if the case is covered in section 62. 62 covers the revocable transfer only, but that is revocable after the death of the transferee. Till the transferee is alive, the transfer is not revocable, meaning that the asset will come back to you? No. Directly or indirectly, the asset will come back to you? No. Do you have the right to take the asset back in your control? No. Are you taking any benefit of the income of that asset? No. That means the transfer is not revocable during the lifetime of the transferee. Then whatever income of that asset will be there till the transferee is alive will be taxable for him, will not be clubbed in my hands. But the moment that transferee will die, I will again have the right to take the asset back in my control. Yes or no? Now the moment that right comes, whether I am taking the asset in my control or not, now onwards whatever income will be there will be taxable as my income. Whether or not I take the asset back in my control, getting my point, after the death. But till the transfer is alive, the income will not be clubbed. Will you remember what is the definition of revocable transfer, guys? Definition, come on, tell me. Given in section 63. That's what I have just now explained. Yes or no? How many sections are remaining? One section, 64. Done. 64 subsection 1, clause 2. Clause remuneration. Remuneration to spouse from concern. Concern where individual has substantial interest. Where the individual has. So there is one concern. In that concern, this individual is having substantial. But wait. Did I use the word individual in section 60 or 61? So any person making such transfer, section 60 and 61 will be applicable. Yes or no? So any person transferred the income to any person. Any person transferred the income to any person without transferring the asset. Section 60 will apply. Any person making a revocable transfer of asset to any person, then the income of that asset will be clubbed as per section 61 in the hands of transferor. So section 60 and 61 does not use the word individual. These two sections are applicable for all the persons. Yes or no? Individual, HUF, company, any person will be covered in section 60 and 61. But if you come to section 64, specifically this is made for those assessees who are individuals. So if you are an individual, if you are and you have a substantial interest in some concern, you have a substantial interest in some, and from that concern, your spouse is receiving remuneration without adequate professional or technical qualification, experience, knowledge, etc. Then you are the person who have influenced that concern to give your remuneration to your spouse on the name of salary, on the name of remuneration. Because you are already covered by higher slabs. You are already covered by, and you did not want this income from the concern coming in your hands. Because if this income would have come in your hands, it would have been taxed at what rates? 30%. So it told the concern, partnership concern, I am your partner, having substantial interest, 50% or more, 20% or more, profit sharing. Happy Diwali. Hello. So wait. Did you see my energy dropping since morning? I'm having the same energy? Sure? Or my energy has increased? Yes or no? How the Kulavari? I love teaching. And that is not happening with you. The more you will sit, no, the more battery gets drained. I can understand, see, I can understand you have been sitting since morning, okay, no? But I have showed you the evidence. Already a chartered accountant. Who wants to be? You want to be a chartered accountant? Cheer up. Sit straight. Yeah. What is this? Sit straight. And remove yourself from sleep. Come on, tell me, are you an individual? Do you have substantial interest in a concern? That concern can be a partnership firm, that concern can be a company, that concern can be any business concern, yes or no? If you have 20% or more profit sharing in that concern, or if that concern is a company where you are having 20% or more beneficial ownership of shares, then that concern is a concern where you are having substantial interest. Now, from that concern, some income was supposed to be received by you. If you receive that income from that concern on your name, that will be taxable in your total income at 30% rate. So what you did? You influenced that concern because you are having a substantial interest. You influenced, told that concern, no, how much income you are supposed to give me? 5 lakh? No. 5 lakh will come to me in my total income on my name, will be taxable at what rates? 30%, 1,50,000 tax I will have to give. I am influencing you, 20% or more profit sharing, I am influencing. Give that 5 lakh rupees to my wife. On what name we will give? Salary. We will show that she is working as an Accountant, she's 10th failed. Having no experience, no qualification, no professional or technical qualification to be working as an accountant. And bloody to such type of spouse, you are transferring your remuneration. Now, my wife stays with me in one house. Where the remuneration is going to come? At my house. The money will come to me only. But is it coming on my name? It is coming on the name of my. Now, total income of spouse will be calculated. In that total income, this amount will be shown as salary. How much? 5 lakhs. First 2 lakh 50, no tax. Next 2 lakh 50, 12,500. Entire amount will go in rebate. Spouse will not pay a single rupee of tax. And bloody, if that entire 5 lakh would have come on my name, I would have to pay 1,50,000. Ayyo, 1,50,000 tax. Sarkar ko chuna lagaya. Meaning, I have fooled the government by not paying this 1,50,000 tax on my income, which I should have paid. Now, the moment they will come to know that from that concern, my spouse is getting that remuneration without having any professional or technical skills, qualification, experience, etc., that remuneration will not be taxable in the total income of my spouse. That will be clubbed in my hands under section 64(1)(2). Will you remember this? Now pay attention. This remuneration you understood? Hello? Now next one, transfer of assets. Which assets? Any asset other than house property. Other than to whom? Spouse. Whose spouse? Neighbors or my spouse? So even this point is relevant about individuals. So if you are an individual, you have one asset, yes or no? That asset you have transferred to your spouse without taking adequate consideration and without an agreement to live apart. Oh, you have taken a consideration. No, I have not taken any consideration. Oh, then you and your spouse have an agreement to live. No, we are staying together. Then why the bloody hell you have transferred your asset on the name of your spouse? Simple logic. The asset was on your name, so the income was coming on your name. Hello? And it was getting taxed in your total income at higher rates. To avoid that tax, you have transferred the asset on the name of your spouse. Common sense. And now the asset is on the name of your spouse. The income will come on the name of your spouse. Asset is still with you, because your spouse is still with you. There is no agreement to live apart. You and your spouse, there is an agreement to live apart? No, you are staying together. So bloody, if you are staying together, asset was first on your name, now the asset is on the name of your spouse. Still the asset is with you. Income of that asset is still coming to you in your house. And now the income is coming on the name of? Don't think that the income we will charge in the hands of spouse will be clubbed in your total income. 64(1)(2). 64(1)(2). Yeah, sorry, 64(1)(4). But wait, the asset should not be? Asset should not be. Why? Deemed owner. If you have a house property which you have transferred to your spouse without taking adequate consideration, without an agreement to live apart, bloody, for that house property you are already a deemed owner, and the income of that property is already taxed in your hands as if you are the deemed owner. And just imagine, if this property we are not eliminating from here, the income of that property will again be taxed in your hands by applying the clubbing. One income will be taxed twice. Once by making you deemed owner, and second by applying the clubbing provision. You want us to charge this income twice in your hands? Then, other than house property, all other assets. Hello? Other than house property, all other assets. Will you remember this? But wait, there is some doubt here. Should I ask you? Relationship of husband and wife. Relationship of must exist at both the times. At the time of transfer, I am transferring to my spouse. At the time of accrual of income, the income is accrued to my spouse. only then that income will be clubbed in my total income. Bloody at the time when I made the transfer, she is not my wife. Huh? She is not my wife. At the time when I transferred, engagement got fixed. Courtship period is going on. Amma, Appa, both the families met, engagement is done, marriage is fixed. Until the time we are not getting married, we'll meet each other, we'll then there will be, I love you from my side, I love you from her side. The love is growing, and out of love, she is not yet my wife and I have transferred my asset. Ayyo, risky. What if she changes her mind? I've taken a risk. But fortunately, I married to the same person. Fortunately, she became my wife. Now she is earning income after being my wife from that asset which I had transferred to her at the time when she was not my. This income is not liable for clubbing because the transfer needs to happen to spouse. Got it? First 2-3 years were beautiful, Why? New marriage. After 2-3 years, what happened? She started shouting. I started fighting. She used to hit me. I used to dodge. I used to save myself. But I could not save myself a lot. Every time she used to catch me. Every time she used to hit me. Now the things were very unbearable for me. I told her, please leave me, Amma. I don't want to stay with you. Just imagine if my wife is like that, so dangerous. I want to tell her, please leave me. I don't want to stay with you. Will I go and ask for the asset which I had transferred? No. That also you keep. Understanding or not? So now I gave divorce to my wife. After divorce, the asset is still with her. And she is earning income from that asset. Income is earned by her at the time when there is no relationship of husband and wife. That income should not be clubbed in my hands. Getting my point? So the relationship of husband and wife must exist at both the times. At the time of transfer as well as at the time of accrual of income. This is a Supreme Court judgment. Philip John Plaskett Thomas. 4 persons, no, 1 person only. The name is like that. Philip John Plaskett Thomas. In this case, the Supreme Court gave the decision. If the clubbing provisions of 64(1)(4) needs to be applied, the relationship of husband and wife must exist at both the times. At the time of transfer as well as at the time of accrual of income. Only then this clubbing provision will be applicable. Yes or no? What if at the time of transfer she is not my spouse? No clubbing. At that time she is my spouse, but at the time when she is earning the income, at that time she is not my spouse. Then also no clubbing. What if I have transferred the asset but I have taken adequate consideration? Then also no clubbing. Hello. What if I have transferred? What if I have transferred for an agreement to live apart? Then also there will be no clubbing. Getting my point? Now tell me, I transferred shares to my wife. I transferred shares to my wife. What is the asset transferred? So they are saying that the income of the transferred asset will be liable for clubbing. If an individual has transferred the asset to spouse, individual has transferred the asset to without taking adequate consideration, without an agreement to live apart, then the income of the transferred asset will be liable for clubbing. Income of the will be liable for what asset I transferred? My wife exchanged the shares with my brother. She gave shares to my brother and my brother gave bonds or debentures. Now, does she have the same asset which I transferred? Or the form of that asset has been changed? Now what asset she is having? From bond she will earn interest. Will that interest be liable for clubbing? See, if she would not have done it, the asset transferred was shares. From that shares, whatever income she is earning is liable for clubbing, because shares are the asset which I transferred her. Yes or no? But she converted the shares, she changed the form of the transferred asset into another asset. Now what asset she is having? From bonds, will she earn income? Will that income be liable for clubbing? If that is not to be clubbed, then the entire provision is of no use, no? So there is one explanation. There is one which says that if the originally transferred asset is there, so from that asset whatever income is earned by spouse, that is liable for clubbing. Yes or no? But if the originally transferred asset, the form of that asset is changed to another asset, the form of that originally transferred asset is changed, it is converted into some another asset, then the income from the converted asset will also be clubbed. Getting my point? Income of the converted asset will also be clubbed. What if I'm giving cash to my wife? What is the asset transferred? And now that cash will be invested in some bank deposit. And from that bank deposit, if she is earning interest, that will be liable for clubbing, because the transferred asset, the form of the transferred asset is changed. It is converted into some other asset. Getting my point? Hello? Now, one more thing I'll ask you. If I have transferred one, for example, few shares. What have I transferred? Income of that shares will be liable for clubbing. Dividend from that shares should be clubbed or should not be clubbed? Sure, no? Now what if my wife has sold those shares and she has earned capital gains? Will that capital gains be clubbed? Any income of the transferred asset, whether revenue in nature or capital in nature, all the incomes are liable for clubbing. So even if she is earning a capital gain income on transfer of that shares, still that income will be liable for clubbing. Will you remember this? Hello, sir. So this was your section 64, subsection 1, clause 4. Clause, will you remember this? Now see, wait. I wanted to have the asset in my home and also the income of that asset in my home. Hence I transferred the asset to my spouse. But they said clubbing will happen. I still want to have the asset in my house and income also should come to my house. But if I transfer that asset to my spouse, they will do the clubbing, no? What to do? My son is there. My son is already 24 years old. Studies over. We are finding a good bride for him. Kalyanam. Not my son's Kalyanam. Hello. Now son will marry and he will go to in-laws place, no? Or daughter-in-law will come to my place. See, this cannot happen if my daughter was there and she was getting married to some person. She will leave my wife. Bloody that fellow is going to take away my daughter. Will I transfer my asset to him? No. But I will definitely transfer my asset to a good girl who is coming to my house as my daughter-in-law. Is she my spouse? No. She is my son's wife. She is going to stay at my house with the family, yes or no? Now what if I transfer the asset to my son's wife without taking adequate consideration? Then asset will still remain at my house and the income will still come at my house. Clubbing will happen under clause 6. Now the transfer of assets. Assets means any asset. Assets means any asset. Now house property should not be excluded here, yes or no? Any assets. Two. Two. Sir, instead of son's wife, should I write daughter's husband? I told you, no, daughter's husband will take away my daughter. Should I transfer my asset to him? But he is not keeping my daughter at my home. Will he keep the asset at my home? Will he give the income of that asset in my home? No, he will say, hello, daddy, I have taken your daughters, I will take your asset also. No, so I will not transfer my asset to him. Hello, getting my point? But definitely son's wife is going to come at my home. So if I want to keep the asset at my home and income at my home, I am going to definitely transfer this asset to my son's wife to avoid my taxes. Yes or no? I will be caught in this case. Clubbing provisions will apply. And all the points which I have discussed under clause 4, applicable ditto. Applicable ditto. Now wait. Can I transfer the asset to my spouse? They will catch me. Clubbing will done. So, to avoid that, what I did? I transferred the asset to my son's wife. Again, they caught me. Now, to avoid all these two clubbings, what should I do? I will not transfer the asset to my spouse. I will not transfer the asset to my son's wife. I will transfer the asset to someone else. And tell that someone else to pass on that income to me. Yes or no? Then bloody it will become revocable transfer. I will be caught in section 61. I don't want to do that. Tell that person to pass on that income to my spouse or son's wife. Now from which asset my spouse or son's wife is getting income? From the asset which I have transferred them? No. From the asset which I have transferred to other person. That other person is earning income of that asset. Is that person giving that income to me? No. So no clubbing under section 61. So that other person is using that income for the benefit of my spouse or son's wife. Getting my point? What is happening? No clubbing under clause 4, no clubbing under clause 6. And I am saving myself from 61 also. Revocable transfer? No, irrevocable. Hello? But if that income of that asset will be used for my benefit, then it will become revocable transfer. And income will be clubbed in my hands as per section 61. So I will tell, see, why would I give the asset to other person? Will I give the asset to Nandu? No. Yes, sir, Nandu is other person, no? I will form a company. In the eyes of law, company is also a person. I will form a partnership firm. Partnership firm is also a person. Company, take this asset and the income of this asset, don't give it to me. No. Give the benefit of that asset, give the benefit of the income of that asset to my spouse, to my son's wife. Now, have I transferred the asset to my spouse? Have I transferred the asset to my son's wife? Clause 4, clause 6 will not apply. Have I transferred the asset to other person? Other person means company. And that company is giving the benefit of that asset to me? No. 61 will not apply. So, income still is with me only. But it is rooted through that person coming to my spouse, coming to my son's wife. It is ultimately at my house only. I have avoided clause 4 also, I have avoided clause 6 also, and I have avoided 61 also. They will say, Anna, there are 2 more blank spaces. So now I am transfer of assets to any person, same to same, for the benefit of my spouse or son's wife. For the benefit of my spouse or son's wife. They will cover those incomes also as my income. Because they have come to know that I have done this to avoid the clubbing provisions of clause 4, clause 6 and section 61. Getting my point? So what will happen? See, in clause number 4, whatever income of the transferred asset is there, full income will be clubbed in my hands. Did you understand? Clause number 6. Whatever income of that transferred asset is there, full income will be clubbed in my hands. I cannot say, let's see, no, out of that income, some income is already kept by my spouse. Some income is already used by my son's wife. So don't include that income. Include only that income which he is giving me. No, I cannot say that. I cannot argue. Because in both these two cases, what is happening? Entire income of that asset, whether some income is retained by the transferee or not, is irrelevant. Entire income of that asset will be liable for clubbing. Yes or no? But in the last two cases, here and here, the income of the asset which is transferred, the income of the asset which is transferred to another person, that income which that person is earning will not be clubbed. Out of that income, the income which is used for the benefit of my spouse or son's wife, to that extent only it will be clubbed. Yes or no? Now, for example, the asset transferred was it was debentures. And from that debentures, 1 lakh rupees of interest was there. How much? And I have given clear instructions that from that 1 lakh rupees, which will come on the name of that person, that 1 lakh rupees is the income of that asset. That entire 1 lakh is not going to be clubbed in my hands. Out of that 1 lakh, if entire 1 lakh is used for the benefit of my spouse or son's wife, then only that 1 lakh will be clubbed. But out of that 1 lakh rupees, 10,000 you keep and use 90,000 for the benefit of my spouse or son's wife. Then how much amount is used for the benefit of my spouse or son's wife? Only that amount will be clubbed in my hands. Will you remember? Hello? Till clause number 8. Any problem? Sure? Now clause number 8 is done. Now this is income of minor child. Income of, do you have a minor child? See, I tried my level best to avoid taxes on my income. So first I tried to give the asset to my spouse. They caught me. Then I tried to give the asset to my son's wife. They caught me. What other thing I can do to keep the asset at my home and keep the income also at my home? Family planning. Minor son. Minor child. Hello? So on the name of minor child also I can transfer the income. Where will be my minor child? Someone else's house or in my house only? So asset still remains at my house. Hello? And the income also remains in my house. Don't you think I have avoided all the provisions? So they will say, 64 1A. Income of the, which income? All incomes. All the incomes of your minor child will be liable for clubbing. Wait. We will not club one income. The income which your minor himself is earning from his own skills, talent and knowledge, etc. My minor child is very talented. Dancer, acts in movies, just an imagination, not real. I don't have a minor child also. I'm just giving you an example. If my minor child is there, my minor child is working in movies. He's dancing, dance performances. Pragnanand, chess master. Gukesh, chess master. Bloody, they have been playing since their childhood. Kind of, knowledge they have about the chess and the skills they have. By exercising their skills, by exercising their talent, they are earning incomes. Have I transferred that income? Don't club that income. So income of minor child, which income will be clubbed? All incomes. What did I say? All incomes will be clubbed. But one income is not liable for clubbing. The income which the minor child is earning from his own skills, talent, manual labor, knowledge, etc. Yes or no? That income will not be liable for clubbing. Number two. If my minor child is handicapped, then even if I have transferred him the income, that income will not be clubbed. If my handicap minor is earning from his skills, that is not going to be clubbed. Normal minor earning from skills, no clubbing. Handicap minor earning from skills, no clubbing. But normal minor earning other incomes will be clubbed, no. What about my handicap minor earning other incomes? No income of the handicap minor will be liable for clubbing. And if you transfer any house property to your minor who is a handicap, even that income for that house property also you are not the deemed owner. Reason being very simple. Bloody by transferring those income or transferring that house property on the name of your handicap minor, no, you're trying to secure his future. That God forbid if something happens to you, at least from that property, at least from that income which you have transferred to your minor, handicap minor, from that income, his survival, goes on. He does not have to depend on someone else. So you might have transferred your income to your handicap minor to safeguard his future and not to avoid tax, assuming that any income of the handicap minor will be clubbed or will not be clubbed. If the property is transferred to the handicap minor, income of that property will be taxable for you as a deemed owner? No, for that property also you will not be treated as deemed owner. That entire income belongs to minor, will be taxable in the hands of minor. But it will not be clubbed in your hands. Yes or no? Now one small doubt arises here. Should I ask you? Hello? If I have a minor married daughter, Balika Vadu. In Hindi we call it Balika Vadu. Balika means small girl, Vadu means married. So minor married daughter. Sir, but child marriage is not, murder is also not allowed. But still the people, do the murders and all, no? And by murdering someone, if you'll earn income, you should pay tax on that income. We are no one to judge that this should be done, this should not be done. That is an offense as per Indian Penal Code. Hello? The other laws will take care of that. But if you have done that wrong thing, what? Child marriage. And child marriage of your daughter. Then your daughter is a minor. She is a minor married daughter. Is she going to earn any income? Is she going to earn any income? Any income of minor married daughter shall not be taxable for her parents-in-law. Shall be taxable in the hands of the parents only, because she is your minor. She is your minor and not the minor of her in-laws. So my daughter, minor, got married to some other minor. She is the daughter-in-law in that family. That does not mean that she is not my minor child. Whatever income of any minor, even the minor is minor married daughter, will always be clubbed in the hands of parents. Always be clubbed in the hands of, and not in the hands of parents-in-law. Will you remember? Whatever income of minor married daughter, including the income of the property which you have transferred without consideration, that income will also be liable for clubbing. Hence, for that property you are not treated as deemed owner. Even if the property was transferred to minor married daughter, for that property you are not the deemed owner. Why? Because that income gets taxable in your hands by applying the clubbing provision. Getting my point? But any other minor earning any income, that income will be clubbed. Hello? But if he is earning income from the property which you have transferred him, that will not be clubbed. Why? Because for that you are already a deemed owner. So now let's finalize. 3 minors. One handicap minor, minor married daughter, and normal minor. Number one, handicap minor married daughter, and listen to me carefully. A house property is transferred. I have a house property, I have transferred on the name of my minor. Income of that property. Income of that earned by handicapped minor. Will I be a deemed owner for that property? Will that income be taxable for me by applying clubbing provisions? No. So no clubbing will happen and I am not the deemed owner. That is the income of my handicapped minor. Hello, sir. Now that house property was transferred to my minor married daughter. Clubbing provisions will apply. That income will be taxable in the hands of parents. So if already the income is taxable in the hands of, should I be treated as a deemed owner for that property? Section 27 will not apply. But clubbing will apply. That income will be still taxable in my hands as per 64(1)(a). Yes or no? Now if the house property is transferred to my normal minor child, I am already a deemed owner as per section 27. No clubbing. Because already that income is taxed in my hands by considering me as a deemed owner. Now did you understand why both the minors were eliminated from deemed owners? Yes or no? I have connected these 2 points. Now wait. Any income earned by my minors from their skills, talent, knowledge, etc. by my handicap minor, clubbed or not clubbed? No income of handicap will be clubbed, and bloody this is income from his skills. Number 2, if the minor is a minor married daughter, well, she is my child, what? The income is earned through her talent, etc. will not be clubbed. Yes or no? What if it is earned by my normal minor child? No clubbing. Did you understand? Now be very careful. This income which is earned from their skills, this income which is earned from their, now this income is invested somewhere. This income is invested somewhere on the name of minor child. And from that invested income, another income is coming. For example, minor is earning from their skills 10 lakh rupees. Will it be clubbed? No. So that income which is coming from skills will not be clubbed. But if that 10 lakh rupees income is invested in some asset, 10 lakh rupees is invested in some business, and from that investment, from that business, if new income is coming on the name of minor, will that be clubbed? Yes. Because that is not the income from their skills. If it is minor or minor married daughter, then the income will be clubbed. But if the minor is a handicap minor, then the income will not be clubbed. Yes or no? Yes or no? And last one. Any other income. Not covered in point number 1, not covered in point number 2, not covered in point number 3. Any other income of the minor child shall be clubbed or shall not be? Shall be clubbed. But the minor should not be a handicap minor. Minor married daughter or normal minor, that income will be liable for clubbing. Will you remember this? Now in whose hands the income will be clubbed? In the hands of mother as well as father. In both hands, no? Or anyone whose total income is higher before applying the clubbing provisions of 64(1)(a). So don't apply the clubbing provisions of 64(1)(a). Calculate the total income of mother, calculate the total income of father. But remember, if other clubbings are applicable, you are supposed to take those without taking 64(1)(a). Without taking, if other clubbings are available, then consider other clubbings to calculate the total income. Calculate the total income of father, calculate the total income of mother. If father's total income is higher, father has transferred the income, club in the hands of father. If mother's total income is higher, mother has transferred the income, club in the total income of mother. Yes or no? Hello? Now tell me, if father and mother are alive and the marriage subsists, then only in the hands of any one parent, like this. But what if marriage of the parents does not subsist? Divorce. Or one of the parents die. Then marriage of the parents does not subsist. Then in whose total income the minor's income should be clubbed? In the total income of that parent who manages the minor, who has the custody of minor. Simple. Hello? But what if both the parents have died? In the total income of legal guardian. Getting my point? Now one simple question. During the previous year 24-25, during the previous year, your age was 17 years. Your age was? Today is 25th of November. Today you achieve the age of majority. You become 18 years. Income of the entire year will be clubbed, or income up to the age of 17 will be clubbed. If in a previous year minor attains the age of majority, minor attains the age of, so any income of that minor, any income of that, after he attains the age of majority will be taxable for him. Now that will not be liable for clubbing. Now that will not be liable for, but up till the date on which he is still a minor, all the incomes of such minor during that year will be liable for clubbing. Will you remember? Hello. And whenever the income of the minor is clubbed, for every minor, for every income, for every minor, the income which is clubbed, for every minor, the income which is clubbed will be clubbed in the hands of parents, but this parent will also get exemption up to 1500 per annum per child. Per income? No. For that child, total of all the incomes will be exempt in my hands up to 1500. For how many minors? All the minors. If I have 5 minors, income of all the 5 minors is liable for clubbing. For each minor, 1500 rupees is exempt. Income up to 1500 is. But this exemption under 1032, this exemption under 1032 will not be available if you follow. Understood? This is 64(1)(a). Done. Now the last section 64(2) and 65. 65 is not relevant, and this is if you transfer the asset to your HUF, so income of that asset which you have transferred to HUF, that entire income will be liable for clubbing. That entire income will be liable for clubbing. But if HUF is under partition and the asset transferred by you is also under partition, so after the partition, whatever part of that asset is coming to your spouse, coming to your income of that part of asset only will be liable for clubbing. Wait. Before partition, if the asset is transferred, so income of the asset earned by the HUF will be liable for clubbing. Full income will be liable for clubbing before partition. But if partition takes place and the same asset which I have transferred becomes the subject matter of partition, this asset was also put under partition, not given to me. Asset belongs to HUF. Now HUF is getting partition, so this asset will be given to members. The part of this asset which is given to my spouse, to that part whatever income relates, only that much will be liable for clubbing. Any part which is given to other members, the income relating to that part will be taxable to respective member, and that will not be liable for clubbing. Yes or no? And section 65 says that whenever the asset is transferred, the transferee is not liable to pay tax. Who is liable to pay tax? Transferor. Who is liable to pay tax? Transferor. But if in some case the transferor is not able to pay tax, then the tax on that clubbed income can be demanded from the transferee. Transferee cannot deny that I will not pay tax. You have clubbed the income to the transferor. Ask the tax. We have asked, but we are not able to recover that tax from the transferor. Then we have the full power to demand the tax on the clubbed income from the transferee also. 65 gives the power. Yes or no? With this, the chapter comes to an end. And we are meeting in the next lecture, and next lecture we are going to finish the syllabus. Till then, bye-bye.